Hey everyone, and welcome back to the channel where we dive deep into the fascinating world of hard-to-borrow stocks and potential short squeeze setups. Today, we're putting a specific company under the microscope, one that recently popped up on our screeners due to some truly eye-watering borrow fees. We're talking about DXST Holding Inc., trading under the ticker DXST. Get ready because the numbers here are compelling, but as always, we'll break down the full picture. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Show company logo/info card. Let's start with a quick overview of DXST, DXST Holding Inc. This company operates in the industrial sector, specifically within waste management. They are involved in industrial wastewater treatment services in the People's Republic of China, and they also focus on ecological river restoration and offer microbial products. With a market cap of just $5 million, DXST is a microcap stock. Now let's look at recent price action. DXST closed down 4.68% today. Over the last 5 days, it's down 15.47%, and over the last 30 days, it's seen a significant drop of 19.13%. Volume today was extremely low at just 40,000 shares, a mere fraction of its 30-day average volume of 1,281,383 shares, giving it a relative volume of 0x average. What is cost to borrow and why it matters? So, what exactly is cost to borrow or CTB, and why does it matter? Imagine you want to bet against a stock, meaning you think its price will go down. You need to borrow shares from someone else, sell them, and hope to buy them back cheaper later. The cost to borrow is the annualized fee you pay to rent those shares. Think of it like an interest rate on a loan, but instead of money, you're borrowing shares. When this fee skyrockets, sometimes into the hundreds or even thousands of percent annualized, it signals that demand to short the stock is incredibly high, or the supply of shares available to borrow is incredibly low, or both. This fee directly impacts a short seller's profitability and their willingness to hold a short position. Why this stock is hard to borrow right now. I'll highlight CTB number on screen. Now let's apply this to DXST. This stock appeared on our hard to borrow screener with an astonishing annualized cost to borrow fee of 693.1%. That is an extremely high number and means short sellers holding positions in DXST are paying a hefty premium just to keep their bet against the company. This suggests that DXST shares are exceptionally difficult and expensive to borrow right now. With an estimated float of just 1.2 million shares and the current borrow availability being unknown, it points to a very limited supply of shares for shorting, pushing that borrow fee through the roof. Squeeze mechanics explained. For those new to the concept, a short squeeze is a fascinating market phenomenon. It starts when a stock has a high short interest and a high cost to borrow, like DXST. If something causes the stock price to start rising, perhaps good news, unexpected buying pressure, or even just general market sentiment, the short sellers who bet against the stock begin to lose money. As the price goes up, their losses mount. To limit these losses, or if their brokers demand more collateral and margin call, these short sellers are forced to cover their positions. This means they must buy back the shares they initially borrowed and sold. This forced buying creates even more buying pressure, which in turn pushes the stock price higher, forcing more short sellers to cover, and so on. It's a cascading effect that can send a stock's price soaring in a very short period. Dilution risk check. One critical factor to consider in any potential squeeze play is dilution risk. Dilution occurs when a company issues new shares, increasing the total number of shares outstanding. This can be done through offerings to raise capital. For DXST, our check found no recent dilutive SEC filings like SMIN-S1, SMIN-S3, or 424B in the last 90 days, which is a positive sign for a short squeeze thesis. Why does dilution matter? If a company suddenly floods the market with new shares, it can significantly offset any buying pressure from short covering. More shares mean the demand has to be much greater to move the price, effectively negating or at least dampening any short squeeze potential, even if the cost to borrow remains high. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Show screener score. So, what should we watch for with DXST? While its 693.1% cost to borrow is certainly attention-grabbing, it's crucial to remember that a high CTB does not guarantee a short squeeze. Our internal composite squeeze score for DXST currently stands at 46.4 out of 100, which suggests mixed signals and isn't a super high score. This can mean that while it's expensive to short sellers might have strong conviction in their bearish thesis and are willing to pay those high fees, especially given DXST's recent downward trend, losing nearly 20% in the last month. We'd want to see a significant increase in trading volume far above the current CROX relative volume combined with strong upward price momentum to indicate a potential shift. We also checked for reverse splits and found no recent reverse split for DXST in our look-back window. In summary, decent holding DXST presents a fascinating case with its incredibly high cost to borrow of 693.1%, signaling it's extremely expensive and difficult to short. This, combined with a relatively small float of 1.2 million shares, sets the stage for a potential short squeeze scenario. However, the recent negative price action and low trading volume suggests caution. Remember, investing in these situations carries significant risk. Keep an eye on DXST's volume and price action for any signs of a shift. If you found this breakdown insightful, please hit that like button, subscribe for more in-depth stock analysis, and let us know in the comments what stocks you'd like us to cover next. Your questions and engagement help us grow. Thanks for watching, and we'll see you in the next video.